Hello and welcome everyone. Good afternoon to all present out here. I am Aditya Kumar Shah and I'm thrilled to be hosting this session for Dolphin Markets. I specialize in stock trading and also forex. I bring some years of experience in equity advisory, portfolio management, and market analysis to this platform. Over my career, I had a privilege of managing portfolios worth over 150 crores INR till date in my professional journey, which have where I have delivered compounded returns of 60 to 70% for my clients. Also, my expertise lies in creating data driven strategies with a strong focus on fundamental analysis. Right. This also includes an in depth review of financial statements such as income statement, balance sheets, and cash flow statement. It is not just limited to the financial statement, it is also combined with industry analysis, peer comparison, valuation matrices, economic analysis, SWOT analysis, and actionable insights on what changes can enhance a company performance. All this accumulates in a well-rounded investment advice to help client make an informed decision. Right. So this is my expertise where I do the fundamental analysis, and you can be rest assured whatever money you are investing in a right direction, and you will be getting the returns from our strategy. Right. What is the purpose of this live stream? What we will deep dive into it. We will first review our stock holding, what are the stocks we are holding currently. Secondly, we will look how the stocks are performing now, how the stocks which we are holding are performing in the current market. As we can see, the market has been very volatile, right? The market has taken a dip by 1% today due to the Fed rate cut. It was as expected, and it is showing its effect in the Indian market as well currently. So from there we will dive into the detailed analysis of stock portfolio. We will review our key matrices, market movements, and potential adjustment. So we can look if we can do any potential adjustment or not, right? Based on the recent trends we see. This is a chance to see how a structured approach to investing using fundamental analysis can drive consistent result over time. So be rest assured, whatever your investments are holding are, we will be deep diving into the fundamental analysis and will let you know how this can drive consistent result over time. Will be the call to action? If you have any question, right? If you have any question during the live session, feel free to drop in the comment section during the live chat. I will address as many as I can, right? So be interactive in the session. The more you will be interactive, the more we will be able to know about your needs, and the more we will be able to know about your needs, the more we will be able to answer your queries and solve your queries, right? And make you a smart investor in the market. So whatever doubts, whatever queries you have in your mind during the live session, please put it in the comment section. And also about your holding, if you are feeling any doubtful about our current holding, just let me know. I will take you with a proper explanation and let you know that why this holding still is prevalent in the market and will be providing the returns for you. So be rest assured that you will be getting right advice when Aditya is doing the live streaming, right? So coming to the overview of stock holding, what we excuse me, stock holding, what we had Hindustan Oil Exploration, IP Rings and Kriti Industries, GDV Plastic, Muthoot Fincorp, RBL Bank, Pune Wala and Annapurna. So till now we have made our positions in all the eight. We have eight stocks as of now, and out of eight stocks, only three are positive, and most of the stocks are negative. As you can see, the market is falling down currently. The market has taken a dip due to heavy sellings of Fed, FII, and all. So we will go with each and everything, analyze each and every stock very properly. So let's have a look here. So So looking into our holding, we have Hindustan Oil Exploration, DDEV Plastic, Annapurna, right? And we have made multiple entries in Hindustan Oil Exploration and Poonawalla and IP Rings and Annapurna. And currently we have made an exit in IP Rings. So we'll just hide it down, right? We'll just hide it down so that you are able to get the idea that whatever stocks we are booking profit, we are not keeping it in holding. So this was a stock in our holding. We have provided you with the recommendation. You can just take a screenshot and look, have a look, right? If you are not having any position in this holding, you can just make your position in that. Talking about the stock tracking as of 12th of December. So stock tracking, if you look, we have made our profit in Hindware previously 5%, right? In just one trading session we were able to exit and make a profit of 5%. Talking about IP rings, we were able to exit in the IP rings at 212 at a 5% profit. So IP rings, we have been able to be profitable at 5%, and it was a very good profitability for us. We have achieved that profitability very, we took time to reach that, but be late but not far, right? We were reaching the IP rings target at 212 at 5%. What we call in a Hindi na, they there I durust hai, that what IP rings have done. It has come in deri, but it has come durust, and it has made you a profitable. So that what I wanted to me, what want to mean to you. So talking about all the recommendations we have here, right, from Hindustan Oil Exploration to Hindware, we are providing you with the greater returns, and we are delivering consistent returns to you. So looking at the profitability which we have generated till now, looking at the profitability, we have been generating constant profit to you. Just have a look, and till date we have completed our 3 months yesterday. Till 3 months we have done executed 38 trades only till now, and we are being able to achieve the profitability of 237. The cumulative profit, what do you mean by cumulative profit? We add up the profit of each and every stock we generate and come to a cumulative profit. So cumulative profit is around 237% in just 38 trades we have done. And looking into the trades which we have executed, it is around 53 trades we have executed till that, and only 15 whole trades which are there, and in which there are trades, multiple trades in few stocks. So overall, if we look at our holding, only 8 stocks are there which is in our holding, and there are 15 trades in which are left and yet to be executed at the target price. So have a, since we have entered in Annapurna and Kriti recently, so we are waiting for it because the market is very volatile. It is constantly falling from the last week. The market is constantly falling, and we are seeing some negativity in the market, right? So let's have a look on our holding. So we have our holding Hindustan Oil Exploration, IP Rings, Kriti Industries, GDB Plastic, Muthoot Fincorp, RBI Bank, Poonawalla. So let's start from the stock which is having a lower price as an Annapurna Swadist. We are facing some problem, I guess. Let's have a look it once again. So Annapurna Swadist is open as of now. It is trading 1.7% down, negative by 6.4 points as of now. So we have our entry average price for both the entry. We have made our entry at 395 and between 3 400, and the second entry was at 380 to 384. So the average price of both the entries was around this level, right? So the average price of both the entry were around the level of 390. So this is the average price we have, and if you have made an average, your target price, what will be your target price? Calculating from 390, your target price will come to 1.05. If you have made your entry at 390 position, if this is your entry, if you have followed our both of our recommendation and made your average price at 390, your target price will be just 410. So your target price will be around the level of 400. So just make a line, this will be your target price, right? So this will be a target price for what? For your target price for both the entries. So this will be your target price for both the entries at 410, because you have made both the entries available, right? You have executed trades at 400 and the second trade was executed at 380 level. So if you come out to the average price, it will come around 390, and for target price for 390 will be at 400, 9, 10. So make sure whenever you are reaching 400, 9 and 10, considering the you have taken both the trades and your average price comes out to be 390, right? So calculate accordingly and reach your target price. Whenever the stock bounce back from this level, whenever the stock bounces back from this level, it is currently trading at 357. If the stock is bouncing back from this level, we can see expectation increase in stock price, and it will be making some good highs. As you can look, the volume uh, for the stock is increasing consistently. The volume here is increasing from this place, and again it has fallen down, which was followed by the decrease, in the share price. Have a look, which was followed by the decrease in the share price, right? Again the volume was increased, but it and we could see an increase the very next day, very next 2 day, but again there was a fall in stock price, and the volume increased on the 18th of December. Yesterday the volume has increased, but now currently we are seeing some fall in it. We are seeing some fall in it. Let's have a look on a day chart. So if you look at the day chart, the volume is volume is low as of now. Volume is low as of now, and it is trying to increase its position. It is trying to increase. Have a look. If it increase, the volume it keeps on increasing, we will be seeing the stock prices will be also increasing. As you can look here, the volume has increased a bit, and the stock price followed its mark. So, and here the volume kept on decreasing, and the stock price was decreasing here also. So this is the scenario we are having, and once the volume spiked up, once the volume was able to spike up, the stock price kept on increasing. So these are the things which we are saying. When the volume is keeping on increasing, the stock prices is following its mark and it is increasing, right? So we have a question from when the market will grow, from Sunanda. So the market, if you look at the market condition currently, it is falling due to the Fed decisions which we have seen yesterday on the evening. We have seen there was a fall in the market due to the Fed decision which came as expected, but there was a huge FII selling from the FII end, and we have seen that fall coming from the mostly from FII. Not a retail not a retail investors who have sold that stock, and not the domestic institutional investors. The mostly selling has come from the FII. I hope you got your point clear. So we have our we have our support at this level, right? We have our support at this level from 343 to 367. We have a strong support at this level, and if the stock is range bounding between this level and the stock trades around this level, we will be seeing some increase coming up, and it will be increasing from this price. And once it reaches the average, we will be seeing the target price to be reached. We have kept our target price for both the entries at 410. If you have made entry at both the positions which we have told to you, you will be reaching the targets very easily. So we'll just go through the other stock as well. So we are going to Poonawalla FinCorp, right? We were looking into the Poonawalla FinCorp. We have made three entries in the Poonawalla. Let's have a look at the entry price of Poonawalla. So at Poonawalla, we have made three entry. The first entry we have made at Poonawalla was at 390 to 95. The second entry we made at Poonawalla at 375, and the third entry was made around the level of 360. So we have a average price for Poonawalla for all the three entries combined. We were having average price as 375, right? So let's have a look. So the first entry was made between the level of 390 to 395. You can have a look on that. The first entry was made between the 390 to 395. The second entry was at the level of 375, and the third entry we made was at the level of 360. So considering all the average prices, considering you have invested in all the levels, you will be coming to the average price of 375. So this will be your average price for Poonawalla, and if you are considering 375 as an average price, we are considering that you have entered at all the levels we have provided. So your target price will be around 395. So that will be your target price for all the three entries we have made. You don't have to wait for the first entry target price. You can just exit at the level of 395. You can just exit at this level for the average prices for all the three entries you have made. So this will be your target price. Just remember that this will be your target price for all the entries which you have made, right? So this is the target price for all the three entries, and we are seeing it is forming a head and shoulder pattern. Let's make a drawing on that. So the head and shoulder pattern has been made. As you can see, the left shoulder is at around the flip zone at the level of 341, and the head has been made around the level of 339, and the right shoulder is quite down, right, around the level of 324 currently, which is trading at its volume, and we are expecting some fall to come from this level, from the level of around 320 and 322. So if the bounce back is coming from this end, we can see this will be the new flip zone for the Poonawalla, and we can expect some rise from this level. We can expect a great rise in the Poonawalla. As we have seen, the Poonawalla has a great potential to increase, and it will be following its mark, right? And once the Poonawalla start increasing, we will be seeing much more highs coming up in Poonawalla. It will be able to break its previous low also, its previous high, whatever it had around 500. We will be looking at the Poonawalla at the level of 600 to 700 easily. But we don't have to wait for that. We have to only wait for our target price. Our target price is at the level of 390. So if you have made the entry 390 to 395, if you have averaged down all the three entries, so your target price will be this, and you will be able to make a smart exit from the Poonawalla. So you don't have to worry about Poonawalla. The banking and financial sectors are facing turmoil. They are facing problems. Due to that, the Poonawalla, which comes under the banking and finance, the consumer finance unit, is also falling, and it has taken a lot of dip currently, but it also has a potential to grow more, right? Also has a potential to grow a lot more, and it will be seeing its potential in the coming time. It will be growing to a lot level. So we are watching the market currently. The market is facing the range bound as of now. The market is range bound, right? We have talked about Poonawalla, Annapurna Southeast. Let's have a look on RBL Bank. What RBL Bank is doing currently. So talking about RBL Bank is negative by 1.28%. down by 2.13 points. It is trading at the level of 163.71 rupees. So let's have a look on RBL Bank. So we have made our last entry in the RBL Bank at 205. So this was the first entry which we made at RBL Bank. The last entry which we made at RBL Bank around the level of 150. We were able to exit on that. Very easily, and we have made profits from it. We have made a great profit from it, and we were able to exit in just few days. You can have the RBL Bank was in the flip zone from the level of 150. There was a high volume trade going on, and it has shown consistent increase in that. And after that, there was a consolidation phase for at the level of 180 to 185, and the stock started decreasing. And it is falling again. It is falling towards the 163 level. And if we are positive, if we remain positive on RBL Bank, it will follow its mark and increase once again, right? So we have RBL Bank. We have provided you with a resistance at the level of 176 to 181, and the support was at the level of 153 to 146. So this is the support. This is the critical support for RBL Bank to look, and we have to wait for the support to come to wait for the next levels. Let's have a look on Muthoot FinCorp. Let's have a look on RBL Bank financials, how it is doing currently. So going to the web pages, we majorly follow two sites: the Research 360 site and the ticker tape site for all the analysis we do. Right, for some purposes we go for the ticker tape. For like financials are very well shown, the industry which is trading into it. So starting from the Research 360, looking into the company perspective, just have a look what the company businesses are. So about RBL Bank, we have a RBL Bank, formerly was known as Ratnakar Bank, was incorporated in 1943 in Kolhapur, Maharashtra. So it was incorporated in 1943 in Kolhapur, Maharashtra. Is one of the India fastest growing private sector bank with an expanding presence across India. The bank is engaged in providing a wide range of banking and financial services, including wholesale banking, retail banking, treasury operations, and other banking related activities. The bank commenced its operation at International Financial Services Central Banking Unit IBU in Gujarat, International Finance Tech Gift City. So Gujarat International Finance Tech City, Gift City, it has started operation in 2017 and does not have branch in the foreign country. So it doesn't have any global exposure. It is limited to the Indian market. RBL Banks has started a transformation journey under the new management team in 2010. So this was the management was changed in 2010, and it has expanded its presence a lot during the years, right? So this was a brief overview. If we look at the overall RBL Bank financials, the return on equity was negative in 2022. It was positive previously. In the year 2020, the return on equity was 4.7%. In 2021, the return on equity was 4.2%, and it was decreased to 1.3%, right? And it suddenly spiked up to 6.8%. So return on equity is 6.8% in 2023, and again we have seen a spike of a few points, and it increased to 8.5. So on as of 2024, the return on equity has come to a level of 8.5. If you look at the returns over the 1 year, 3 years, and 5 years, right, we can see we have a return of 8.49%. In 3 years we have a return of 2.53%, and in 5 years just 4.57%. So in terms of return on equity, it has improved currently, But overall, if we look at the total return on equity, it has been not very impressive as of now. So looking into the return on assets, as you can see, return on assets was 0.6 in the year 2020 and it was 0.5 in the year 2021. It has decreased to 0.2. Just have a look, it was decreased to 0.2 in the year 2022. And then it started increasing, the RBL bank started increasing, and the return on assets increased to 0.8 in 23 and 0.9 in 24. So this was the return on asset for the RBL banks in 2024, the last result which we have seen. BVSH, if we look at the BVSH from 2020, we are seeing the BVSH to increase, and for 1 year it has been 245%, and for 5 years combined we are seeing 219.85%. EPS, if you look at the earning per share, it is around 11 in 2020 and it has fallen down to minus 2.8 in 2022. So it was minus 2.8 in 2022 and it has increased to 15.3 in 23 and 20.9 in 2024. So EPS, earning per share, has been increasing. The per share earning on the shares has been increasing consistently. So it is a very good sign. Previously, it has taken a dip from 11 to 9.8 and 2.8 minus 2.8. It even fall down to minus 2.8, and again it started increasing at 15.3 and 20.9. So this was the increase in the EPS in the RBL banks. We have seen overall, if you look at the return on equity, return on assets percentage, BVSH and EPS, right? What do you mean by BVSH? Book value per share is the equity available to common stockholders against the number of shares outstanding. Return on equity, you all know, is the measure of component net income divided by the value of its total shareholders equity. So then if we divide the net income by the value of total shareholders equity, we will get the return on equity. How we get the return on asset? Return on asset is an indicator how a company is profitable relative to its total assets, right? If you look at the EPS, earning per share, is a measure of company profitability calculated by dividing quarterly or annually income by the number of outstanding shares. So you can just divide the profitability by the outstanding shares and you will get the EPS, earning per share. So whatever profit the company is making, you just divide the number by the number of outstanding shares, you will get the EPS. And EPS is very important to understand how much profit the company is making in terms of per share basis. So if you divide it by the number of outstanding shares, the profitability of a company, you will get the earning per share, right? So I am clear about that. I hope you understand all of my points here. So if you look at the RBL Bank volume analysis, it has been 46.59 lakh stocks have been traded today. Yesterday it was 1.35 crore stocks have been traded. Day before yesterday it was 83.07 lakh of stocks which was traded. And if you look at the 1 week average, it was around 79.23, and if you look at the 1 month average, the average has been very high. The volume traded stock is 1.13 crore, and today it is half of that. So if you combine the 1 month average, it is much higher than the current volume which has occurred today. And currently if you see, the RBL bank is down by 1.22% at the level of 163.86. So RBL bank is trading at the level of 163.84. So if you look at the income statement of RBL bank, the income statement is not clear at this point. We will go to the ticker tape side to have a look on the income statement. So if you look at the income statement, the revenue was, we will calculate on we will start from the 2021, because when that's the period when the market was trying to stabilize. So if you look at the revenue, it was 10,550, right? In 2022 it was 10,796, and it has started to increase significantly from 2022 to 10,700 crores to 12,180 crores, and then 15,453 crores. So the revenue has been started to increase significantly. It has increased almost 50% from the year 2022. If you look at the net income was 166 crore in the year 2022, and it has become positive as of now. So the positivity is around 1259. So this is the net income we are seeing for RBL banks, right? But if you look at the industry revenue growth, right, as compared to the industries, how it is doing, let's have a look on that. So lower than industry revenue growth, we are seeing the RBL bank have a lower than industry revenue growth over the last 5 years. Revenue has grown at a yearly rate of 14.82% versus the industry average of 16.68%. So these are the revenue growth we are seeing for RBL bank, which is not as par with the industry average. We can see there is a 2% less growth for RBL bank as of now. If you look at the net income over the last 5 years, net income was also around 7.99%, which is much lesser than the much lesser than the industry average of 43.24%. What is decreasing market share over the last 5 years? Market share decreased from 1.43% to 1.31%. So over the last 5 years, we can see the market share have decreased from 1.43 to 1.31%. So this was the market share we were seeing. It has decreased to 1.43% to 1.31%. So the market share for the RBI bank has also decreased, right? It has decreased by 0.12%, which is very large in terms of banking. The banking sector is very huge. The volume is also huge, and in that, if the RBL bank potential is decreasing, it is a very serious concern for the RBL banks as well. If we look at the EPS, the earning per share of a company, we can have a see that earning per share is 2.77, and financial year 2024 we have earning per share of 20.92. So this is the earning per share we have for year 2024 for the RBL bank. We have seen a constant increase in, at least in earning per share. It was around 20 rupees per share of earning was there in the year 2019, and it was decreased to 10.69 in 2022, and it was decreased to 9.57, and it even has gone to negative 2.77 earning per share in 2022, and from then it is showing some bounce back and coming to its level and coming to its good level. So overall, if we see, the RBL bank is improving, but comparing from the industry average, it is not doing at par with the industry average, right? So have a look on balance sheet. If you look at the balance sheet, the currently total assets for 2021 was at 1 lakh, right, was at 1,618.76 crore, and it has increased to 1,38,458.95 crore. So this is the balance sheet, the increase of 38,000 crore rupees of assets totally, including current and non-current assets. If you look at the liability of RBL bank, it has increased from 87,952.52 crore to 123,621.51 crore. So this is the increase in assets. Liability 13 plus 23, 36 crore of liability has increased, which is at par with the assets. So assets and liabilities have increased hand on hand. 38 crores rupees of assets have been increased. 38,000 crore of assets have been increased for the RBL bank, and subsequently 36,000 rupees of liabilities have also grown for the RBL bank. So this is the condition as of now. So if you look at the valuation as compared to its peer, the RBL bank is having a very low P, around 8. So we can expect it is undervalued as of now. The valuations are quite low for RBL bank as compared to the major players in the industry: HDFC Bank, ICICI Bank, Kotak Bank. So have a look. The Kotak Bank, ICICI Bank, and HDFC banks are having a P with around 20, 19 to 20, and we can see there has been much lower PE for RBL bank. Looking at the technicals of the RBL bank, the volatility has been 41.13%. double than the SDFC, ICICI, and Kotak Mahindra Bank. The RSI is also below 70. So we can say the stock is not in overbought zone. It is not above 70. And for the SDFC, ICICI, and Kotak Mahindra Bank, it is also not in the overbought zone, but it is around 70. If you look at the forecast, we don't have to look at the forecast because we will be having our own forecast as well. So looking into the financial year 2025 investor presentation, let's have a look on it. So RBL Bank investor presentation came out in 19th of October 2024. So let's have a look on it. It was submitted to BSE and NSE both, right? Risk disclosure and provisions of SEBI, listing obligation and disclosure requirements. So this is a requirement we had. Press release was done for the half yearly quarter result, September 30, 2024. So the investor presentation, it is for quarter 2 financial year 25. So just remember, it is not an annual report. We are seeing the investor presentation for the quarter 2 results, right? For the financial year 2024. So these are the financial results for RBL Bank. We can see improving operating performance. So we have a highlights for H1 quarter 2 for the year of financial year 2025, improving operating performance, net interest income NNI for the year 2020 for the year 25 grew by 14% year on year to 3315 MIM, right? So NIM was 5.35%. NII was for quarter 2 financial year 25. Other grew by 9% year on year to 1615 crore. NIM was 5.04 crores. Other income for H1 FY25 grew 25% year on year to 1733 crores, right? So other income is also growing by 25%. The net interest income has grown by 14%. NIM was 5.35%. Operating profit was grown by 28% as of now. So net profit grew by 2% to rupees 505. So you can see the operating profits is increasing by 28%. Other income has increased by 25%, but the net profit is just below. The operating profit and the other profit are increasing, but the net profit are coming down as of now. So return on equity for quarter 2 has been at 0.88% and the ROE at 7.79%. ROA return on assets for quarter 2 for FY25 at 0.64% and ROE at 5.76%. Retail led loan growth advances grew by 15% year on year to the advances grew by 15% year on year to rupees 87,882 crores. So this was the advances we have seen growth. If you look at the retail advances grew by 24% year on year to rupees 54,723 crores. Wholesale advances grew by 3% to 33,160 crore. So we can see advances are growing by 50%, retail led loan growth are growing by 15%, retail advances are growing by 24% year on year to 54,723 crores. Wholesale advances are grew by 3%. So we can see there has been advances coming up from 15% from the retail by 24% and wholesale is coming on at 30%, right? So overall deposit, if you look at the retail overall deposit here, overall deposit grew 20% year on year to rupees 107,959 crore. So have a look on it. The overall deposit is increasing by 20%. The CASA ratio at 33.6%. Granular deposit less than 3 crore grew by 22% year on year to 52,223 crores. Accounts for 48.4% of total deposit. Healthy capital level, if you look, capital adequacy ratio and CET1 as of 30 September 2024, including H1, improved to 15.9% and 14.2%. versus 15.6 and 13.8 as of 30 June 2004. So the capital adequate ratio and the CAR ratio has improved to 15.9%, right? And it is showing a well capitalized the medium for term growth. GNP, if you look at the asset quality parameters, GNPA down by 25 BPS year on year to 2.88%, NNPA up by 1 PPS year to 0.79%, PCR was down, PCR was 72.9%, PCR includes technical write-off was around 89.35%, credit score host for H1 financial year 25 at 140 BPS for quarter 2 FY 25 at 80 BPS. If you look at the key parameters we have, if you look at the key parameters, it was deposit up by 20% year on year to rupees 107,959 crores. Advances up by 15% year on year to rupees 87,882 crores, right? And 16.06 million customer across the segment. So deposit is also increasing 20%. Advances had grew by 15%, and there were 60.0 million customers across all the segments. If you look at the growth drivers, what were the growth drivers in this stock? So the growth drivers were retail assets up by 24% year on year, commercial banking up by 17% year on year, granular deposits up by 22% year on year, 1 lakh net customers added in the quarter. If you look at the balance sheet is around 15.9% CRAR, average LCR for quarter 2 at 129%, PCR is at 72.9%. So if you look at the presence of it, presence 550 branches, 406 ATMs, 1300 plus BC branches, 598 districts have been covered, and it is servicing 18,000 pin codes as of now. So it is servicing 18,000 pin codes, 550 branches have been opened till now. So deposits growth led by granular deposit. Total deposit grew by 20% year on year. CASA ratio, right? What do you mean by CASA ratio? Just let me know. CASA ratio is very important. CASA ratio is very important in the banking sector. Just let me know in the comment section if you know about the CASA ratio, or I will explain at the end of the presentation. So total deposit grew by 20%. As you can look, the CASA ratio has been. So if you look at the well at diversified advances, growth led by retail and commercial banking. If you look at the banking, so there have been 24% year on year growth in the retail banking, right? And let's have a look in its financial as well. In the cash flow, just have a look. The free cash flow for the RBL bank was at negative last year 11,275 crore, but it has increased to 4,751 crore as of now. So as of 2024, the cash flow ratio, the free cash flow has increased from negative to positive as of now. If you look at the strong core fee growth, other income, right? Stable operating expenses quarter on quarter. If you look at the expenses of it, the employee expenses 26%, the premises is having 6% expense, depreciation is 3%. The depreciation, what we call the depreciation in value in terms of property, business acquisition and collection has 34%, payments and general banking is at 8%, tech and outsourcing is at 15%, others we have at 8%. So these are the stable operating expenses as we having. So these are the operating expenses which is required to run the businesses. So it are the very so if you look at the asset quality snapshot. So if you look at the asset quality snapshot, the opening balance was at 2404 crores in 2023, and it has increased to it has not increased, it has fallen to 2378 crores, right? If you look at the closing balance, 2441 was the closing balance in September 2023, and the closing balance was 2581 in September 2024. So this was the closing balance. If you look at the GNPA position, right, and if you look at the NNPA position, if you look at the GNPA position, this was the GNPA closing balance, and this was the GNPA, right, gross. If you look at the gross closing position, it was 2581. If you look at the asset quality trend, NPA position, so NPA is one of the important factor in any of the bank. If the NPA keeps on increasing, the non-performing assets, what do you mean by NPA? The non-performing assets. Suppose the bank has given you some loan, right, and you are not able to get back. You are not able to get back, so that goes on a bad debt, and it creates very problem for you. I will explain you in detail what do you mean by NPA. What do you mean by NPA? So let's have a look on non-performing assets. Let's have a clear idea on NPA and what are its definitions and differentiation. Right. So what is non-performing assets? Basically, non-performing assets refer to the classification of loans or advances that are in default or in errors. So what do you mean by default or in errors? Which are people are not able to pay either in default or in errors. A loan is in error when the principal and interest payments are late or missed. So the loan will be in error when the principal and interest payments are late or missed. So default comes when the people are keeping it default and not able to pay the loan and are telling to settle that amount and are bank and have gone bankrupt as of now. The people, institution have gone bankrupt and they are not able to pay the loan. So that goes in default. They are not able to pay any amount and they are just settling for the lower amounts. What do we call in errors? In errors we have if the bank is not able to get that money, that goes in errors, right? If for the few months or for the few years, if the bank is not able to get that money, it goes in error. The loan is in default when the lender considers the loan agreement to be broken and the debtor is unable to meet their obligation. So a loan it's get defaulted when the lender is considered the loan agreement is broken and the debtor is unable to pay their obligation. They are not able to pay anything. They are not able to pay anything, and it comes under non-performing assets. So non-performing assets have two classification. One is default where the people are not able to pay anything, and others are errors where the people have just bounced their EMI or something and not able to pay currently. So it is either late or missed as of now. So coming to the non-performing assets are recorded on a bank balance sheets after a prolonged period of non-payment by the borrowers. So NPA is recorded in the balance sheet of a bank once the payments keeps on defaulting from the defaulter. Keeps on defaulting, like suppose the banks have been seen it is defaulting from last 3 months, 6 months or 8 months. So it is performing, the non-performing assets are recorded on a bank balance sheet after a prolonged period of non-payment by borrower. NPA places a financial burden on the lender. So it creates a financial burden on the lender because they have provided you the loan with something to gain on interest, but you are unable to pay that. You are unable to pay that. That means you will be the non-payment of that, right? You will not pay the amount. Then the bank will face loss and it will create a burden for him. A significant number of NPAs over time can indicate to regulators that the financial fitness of the bank is in jeopardy. So if the NPA keeps on increasing, the FDN keeps on increasing, we will be seeing that regulators are warning the bank. If the NPA keeps on increasing, that means the debt on the company is increasing. They are unable to provide loans in a proper way. They are unable to deliver returns to the investor. So it will be under the regulatory, right? NPA can be classified as substandard assets, doubtful assets or loss assets depending on the length of time they are overdue and the probability of repayment. So lenders have the option to recover their losses, which include taking possession of any collateral or selling of the loan at a significant discount to a collection agency. So lenders have options to recover their losses which taking in possession of any collateral or selling of the loans at a significant discount to a collection agency. How non-performing assets work? So what are the workings of non-performing assets? We are first looking at the RBL financials, right? And then we have gone to look at the investor presentation, and now we are looking for the non-performing assets, how the non-performing assets are doing. So just have a look how the market is performing as of now. Just we'll have a look and go back to our. So have a look, market is still down and is trading around the 23,954 level. So the market is trading around the level of 2394954 level. We'll just go back to the NPA. What do you mean by NPA? We'll understand that. So how non-performing assets work? Non-performings are listed on the balance sheets of a bank or other financial institutions. The lender will force the borrower to liquidate any assets that were placed as a part of debt agreement. Right. So the non-performing assets are listed on a balance sheet of a bank and other financial institution. So whoever financial institutions or bank, if there are non-performing assets, it will be listed. It will be listed on their balance sheet as well, right? So the lender will force the borrower to liquidate any of the assets that were placed as a part of debt agreement. After a prolonged period of non-payment, if you have a prolonged period of non-payment, right, suppose you are not able to pay the loan, if you are not able to pay anything to the lender, you will be facing the non-payment and it will go off in NPA. The lender might write off of the assets as a bad debt and sell it as a discount on a collection agency if no assets were placed. So the lender might write off the asset as a bad debt and sell it as a discount to collection agency if no assets were pledged. So whenever you took a personal loan or something, and if you're not able to pay that, it might send to the collection agency, and the assets will be at bad debt and sell it as a discount to collection agency if no assets were pledged. Debt is typically classified as non-performing when a loan payment haven't been made for 90 days. This is the standard, but the amount of elapsed time can be shorter or longer depending on the terms and conditions of each loan. A loan can be classified as non-performing assets at any point during the term of loan or its maturity. So debt is classified as non-performing when the loan payments haven't been made for 90 days. Even in India, if you see, if the loans haven't been made for 90 days, it is classified as NPA. This is the standard, but the amount of lapse time can be shorter or longer depending upon the terms and condition of the loan. So it also depends on the terms and condition of the loan. Either the bank is giving some leverage to 120 days, to 150 days, to 180 days. It will be depending upon that. Right? If it is made around 45 days, 60 days, it will be shorter than that. So assume a company has a 10 million loan with the interest only payments of 50,000 per month. If a company is having 10 million loan with the interest only payments of 50,000 per month, it fails to make a payment for 90 days or 3 consecutive months. So we are assuming a company which is having a 10 million loan with interest only payments of 50,000 per month. If it fails to make the payment for 90 days or 3 consecutive months, the lender may require to categorize the loan as non-performing to meet the regulatory requirement. So for maintaining the regulatory requirement, it has to keep at that level, and it has to put in the non-performing assets. So this is the most important thing, we have to look at it. So non-performing assets are also referred to as non-performing loans. Also carrying them on a balance sheet places a significant burden on the lender. So non-payments of interest or principal reduces the lender cash flow, and this can disrupt budget and decrease earning, right? When the non-performing assets increases, it will be creating burden in the balance sheet, and it will be creating burden for the lender as well. So the non-payment of interest or principal will be reducing the lender cash flow, and this will be disrupting the budgets, and it will be decreasing the earning, right? So it will be decreasing the earning. So loan loss provisions are set aside to cover potential losses. They reduce the capital available to provide subsequent loans to other borrowers, the actual losses from the default loans are determined and written off against the earning. So we have to look loan losses which are made by it. They reduce the capital available to provide subsequent loans to other borrowers also. This actually losses from the default loans are determined and written off against earnings, right? So carrying a significant amount of NPA on the balance sheet over time is an indicator to regulators that the financial fitness of the bank is at risk and the bank may default in future. So we have to look, the bank is maintaining the risks, right? The bank is able to manage the risks, and when the bank is able to manage the risk, it will be able to grow. And if it's defaulting, if it is getting default day to day, we will be seeing there has been lot of problems in the bank and it will be problematic for its default also, and the bank may face bankruptcy and it may file for bankruptcy where the money deposited in the bank will be at risk. So we have to look around that. So the most common non-performing assets in terms of loan, but there are other forms of loan as well. So we have a overdraft and cash credit, right? What is overdraft? Overdraft accounts are left out for order for more than 90 days, and we also get cash credit, right, in the forms of personal loan and all. We have agricultural advances with interest of principal payments that remain overdue for 2 crop harvest season, for short duration crops, or for 1 crop season